RSP and IWM, real American market. Now, we have a couple things to go over in this. And so follow with me, all right? Follow with me. And so at the top here, we have the Invesco S&P 500 equal weight ETF, the RSP. And so I did a little, what Michael likes said, squiggly lines, forecasting what I see for the RSP. And so as you see from the top point, from which was in early 2022, like January 2022, it had a peak at 164. And the last 2 years, it's been down in the dumps, consolidating. You know, this is what it's been doing. And recently, it just had a huge pump up. And now it's sitting at like 160, but it's getting to resistance around 164 again to this peak. And where we're at right now, I believe it's going to get rejected. It's going to come back down. And probably in like late 2024, right after the election, mind you, I believe it's going to break that resistance and it's going to keep going higher. But right now, I see tech stocks starting to falter. If you take out NVIDIA out of the play, all the other tech stocks aren't doing too hot right now. They're starting to go down. Apple's not doing too hot. Tesla hasn't been doing hot for a while. So it's really the Mag 7, the Magnificent 7 is turned into the Mag 1 with NVIDIA. And so I talked to Michael a little bit on Twitter, and I told him when talking about the Russell Index, the IWM, and what you see at the bottom, it's been consolidating since 2020, essentially 2022. Again, consolidation within this range. And what's interesting about the Russell 2000 is they're small cap companies, and a lot of them what you call zombie companies per se. But when we're going to get into it, they have a high turnover rate. So the companies that aren't performing well, that their stock prices aren't doing well, they're not going to be in the Russell 2000 for much longer. 18% turnover rate. That's 1 in 5 companies that get casted off every year. And this is what I say to Michael. I know how you feel about squiggly lines, Michael, but the IWM seems to have been trading in a tight range for the last 1.5 years, 1.5 years. If this continues, the long-term outlook seems to be bullish, in my opinion, as zombie companies get weeded out. It's been healing itself since COVID QE, which I believe to be the case. And then Michael says, yes, which would invalidate the credit event. I recognize this is a distinct possibility, and every day that goes by, more and more of that debt refinancing tsunami starts coming. The time is running. The move is at a time. Well, for me, how I see it, when I look at the charts, the consolidation isn't a bad thing. Even if the Russell 2000 keeps going down and hits that bottom trend line, it's going to naturally move back up. And if it keeps within that trading trading channel, that just provides opportunity for long-term investors. When you look at America as a whole, what makes America different from literally all the other countries in the world is our small cap companies are abundant. You know, take out the big companies for a second. There's a lot of innovation. There's a lot of young talent that is generating money and help solve issues within the world. And so for some gematria, we have RSP and IWM is real American market equals 313 ordinal and 133 in English reduction. So we're just playing off those 33s. Then we have Invesco S&P equal weight ETF and iShares a 2000 ETF, the best American market indicators, 333 English reduction. So you see the power there.